Let's be real. If you're trying to make a living from trading, you've seen all the get-rich-quick hype out there. But what if the actual path to building real wealth wasn't some shortcut, but a professional blueprint? Well, today, we are breaking down exactly that. A framework from ICT for building a sustainable, long-term trading career. This is all about longevity and attracting serious capital. So let's get right into it.
All right, welcome to AI Explains ICT. In this video, we're diving deep into the core content from Month 5, Episode 13. I really recommend grabbing a notepad for this one. There are some serious gems in here. And since the original ICT content is more about the concepts and the charts, we've made this perfect for listening to on your commute or while you're out and about.
So here's our game plan for today. We're going to start with the crucial mindset you need to trade for a career. Then we'll introduce the absolute bedrock of this strategy, the 30% rule. From there, we'll get into the nitty-gritty of calculating your true risk. After that, we'll talk about what you can realistically expect long-term, the patience required to manage these kinds of trades, and finally, how this all leads to the ultimate goal, getting funded.
Okay, first things first. If you want to do this for a living, you absolutely have to stop thinking like a hobbyist. You have to stop thinking like a gambler. It's a total, fundamental shift in your mindset. We're moving away from chasing those flashy, short-term profits and focusing on building something that lasts.
And this right here, this is the core of that mindset shift. The amateur, the person with that get-rich-quick mentality, they're trying to squeeze every last drop of profit out of every single dollar. But the professional, they're playing a completely different game. They're playing get-rich steady. Their number one job isn't maximizing returns, it's managing risk, it's controlling drawdown. Why? Because that's how you build a consistent, predictable track record that stands the test of time.
So, how do we actually put that professional mindset into action? Well, it all starts with one single powerful principle for managing our money. This is the foundation for everything else we're going to talk about today. It's called the 30% rule.
Now just pause and really think about this question for a second. What would change in your trading if you made a hard and fast rule that no matter how big your account gets, you only ever allow yourself to trade with 30% of it? Now I know for most retail traders this sounds completely backwards, but trust me, this is the cornerstone of the professional approach.
So here's what it looks like. Let's say you've got a $10,000 account. You basically force yourself to view it as only a $3,000 account. That's your active trading capital. The other 70%, that's $7,000, just sits there. It's your cash reserve. It's your safety net. This discipline is what shows potential investors that you are never fully exposed to the market and that you're smart enough to always keep a large cash buffer.
And the benefits of doing this are just massive. For one, you pretty much eliminate the fear of a margin call. That alone is huge. You're never over-leveraged, which takes a massive weight off your shoulders and cuts down on emotional decision-making. You've always got that dry powder ready to go when a once-in-a-blue-moon opportunity pops up. And, maybe most importantly for our goal here, this conservative, professional profile is exactly what serious investors want to see.
Okay, so now that we get how to allocate our capital, let's drill down into the specifics of risk. Because that 30% rule directly changes how we calculate risk on every single trade. And it's this math that's going to ensure you're around long enough to see success.
Let's walk through the math using our $10,000 account. Step 1. Your active capital is only $3,000, right? 10 grand times 30%. So when you decide to risk, let's say, a standard 2% on a trade, you are not calculating 2% of the full 10 grand. No, you're calculating 2% of your active 3 grand. And this is the whole key. Your maximum dollar risk on any single trade is $60, not the $200 that an amateur, using their full account size, would risk. You are playing a much, much safer game.
I mean, just look at this comparison. It says it all. Same $10,000 account. Same 2% risk rule. The typical approach puts $200 on the line. The ICT blueprint? $60. You can survive so many more losing trades with this model. This is the mathematical secret to weathering the storms and staying in the game for the long haul. Now, I know exactly what some of you are thinking right now. $60? I can't get rich doing this. And you know what? You are 100% right. ICT says it himself. This is not the blueprint to get rich tomorrow, or next week, or even next month. This is the blueprint for building a career. It's about proving you can manage money like a professional, which is the key that unlocks much, much bigger opportunities later on.
So, if we're not aiming for those lottery ticket returns, what should our expectations actually be? Let's define what success really looks like within this professional framework.
And honestly, the numbers might surprise you.
First off, you've got to start thinking like a sniper, not a machine gunner. The goal isn't to take hundreds of trades. The goal is to find just 2, maybe 3 absolutely perfect A-plus high-quality setups per year. That's it.
And for those very few precious trades you do take, there's a non-negotiable rule. You only pull the trigger if the potential reward is at least 3 times bigger than your potential risk, a minimum 3-to-1 reward-to-risk ratio.
So you combine that extreme patience with that strict criteria, and what's the goal? A consistent annual return of 18 to 25%. Now wait, before you scoff at that number, you have to understand, in the world of professional money management, that is the gold standard. That is an absolutely phenomenal return. If you can prove you can do that consistently with low drawdown, people with very deep pockets will be banging down your door to give you money to manage.
So we have the strategy and we have the expectations, but honestly, the hardest part is often the execution. It's about managing not just the trade on the screen, but managing your own emotions while you're in it. This style of trading is really a masterclass in psychological discipline.
Position trading is going to test your patience like nothing else. You have to be totally okay with watching a profitable trade draw down against you for a bit. You have to get comfortable with the idea that a 200 pip stop loss is perfectly normal when you're targeting a 600 pip profit. You have to fight that massive urge to panic and move your stop to break even the second you see a little bit of green. And above all, you have to find the inner strength to just sit back and let a trade work for weeks, or sometimes even months.
And this all comes down to a really important concept called the velocity of money. You see, day trading has a really high velocity. You put money in, you get a return out, you get it back, and you do it again, compounding quickly. This position trading model is the complete opposite. It has a very low velocity. You are not going to rapidly compound your account this way. Instead, the focus is on the slow, steady, significant accumulation of wealth over time.
And this is the end game. This is where every single piece of the puzzle comes together. The professional mindset, the 30% rule, the risk calculation, the extreme patience, it is all designed to build the one single asset that will open every door for you, the ability to manage other people's money, or OPM.
This is the ultimate prize. It's not one giant winning trade. It is a beautiful, smooth, upward-sloping equity curve. That curve is your resume. It tells a story without you saying a word. It says, I am a professional, I control my risk, I produce consistent returns. And believe me, to an investor, that track record is worth more than any stock tip in the world.
And this quote from ICT just sums up the entire philosophy perfectly. Your goal is how much can you manage in terms of drawdown and still carve out a rate of return. See, your job isn't to hit home runs. Your job is to minimize the damage during the tough times while still making a respectable profit. If you can master that single equation, you have mastered the art of professional money management.
Hey, if you found this blueprint helpful, do us a quick favor and hit that like button. It really helps the channel out. And make sure you're subscribed so you don't miss our next breakdown. If you have any questions about any of this, seriously, drop them in the comments below. We have a real person who reads and gets back to every single one.
So I'll leave you with this question to think about. Are you building a system designed to get rich quick, or are you building a professional career that's designed to last a lifetime? Thanks so much for tuning in and safe trading.